Rohr here with an early concise highlight on Thursday, March 12th, 2015. It is currently 7:45 a.m. U.S. Central Time, coming to you a bit later than usual because we wanted to stick around and see the U.S. retail sales number in the wake of everything else we've already seen this morning, and that was quite a bit weaker than expected, but now in the context of more constructive influences elsewhere. We'll be back to that shortly. And let's take a look at how this actually is impacting the markets. And we're up about 6 on the day, up at about 2,046 after having been up a bit higher than that. So what's basically happened is, in spite of all the pressure after the higher opening yesterday, where the market early on was back up around 2050, it finally got down to thoroughly test the 2040 to 38 range. Actually, the whole range here is 2042 to 38. That's old congestion, interim congestion, kind of important, and a significant Fibonacci retracement right around 2040. Now, this is, of course, after failing the higher support we'll look at on the intermediate term chart. That is even more important in terms of the failure back below 2060. That's a failure back into that extensive January trading range. So gapping down on Tuesday the way it did to open right near 2060, but then continue down, as you can see, that also caused the hourly MACD to fail below the lower runaway band that it just cleared up above on the Monday recovery. Now, the other aspect of this that is quite important is below 2042 to 38, supports come in about every 20 bucks lower. Now, there is this Fibonacci level here as well, right into 2021, but right around 2020 to 17 is the next support, including a gap. But the bigger supports at the bottom of that January range are down about 2,000 to the upper 1900s. You'll recall all the support down into the 1985 to 78 range the market tested on multiple occasions out of January into the 1st of February. If it should decide to rally instead, very interesting, that 2060 area as well, 62 to 58, was a Fibonacci level that has failed now, but also that coming back up, even out into tomorrow, you've got this downward channel up into the 2050s that's quite important. But for right now, we're keeping a close eye on this 2040 area with a tolerance to 38. That pretty much does it for the short-term view of the S&P 500.